people will argue that you can't control the real estate market, which is true, but there are parts of real estate that you can control compared to stocks, right? So you can control your purchase price, right? With stocks, you can't buy at a discount. With real estate, you can. And that is literally the most powerful wealth generation tool for the average person, is the ability to buy discounted real estate. We've talked about this a lot of times before. If you have a $400,000 property that you buy for $300,000, you just gain $100,000 in your net worth the second that you close on it, right? You can't go and buy a $100 stock for $75. What's going on, guys? Welcome to this episode of the Collecting Keys Real Estate Investing Podcast. You are here on the Wednesday Mike and Dan show with me, Mike DeHaan, and my co-host Dan Austin with his BDE energy. And I feel like he's low BDE energy today, though. I say that. He was getting worked up before because we got corrected by somebody on Instagram over something that we apparently said last week that we can never remember. But your BDE shirts look sick, though, on the new official Collecting Keys store.
On the website. We need to get me to model it. We can't have those fake models up there.
I agree. We definitely need photos of you wearing a shirt with your face on them. That is. I was gonna send you one, but we don't have kids sizes yet, so I needed to. I was waiting until we get those before I got you one.
Thank you for that. I was hoping to get like a size extra small in tween girls, please. I didn't see that in the drop down.
Is that like, do they do tween sizes?
I don't exactly know what tween means. I've heard that, but I think it's like preteen maybe for young women.
I think it used to be that, but then we started putting all this like hormones and shit in our food, so people just kind of go from child to adult when they're 9 years old.
No,
now.
I thought it was the opposite of that, where like there's actually this thing out there where people look younger today. Like if you go look at your parents, you're like, God damn, my dad had a beard in high school, right? And now kids coming out of high school look like they're in 4th grade.
Or they're like freaking stacked, dude. I'm seeing like these like NFL players.
Well, yeah, there's definitely because they have access to great hormone therapy that we did not have.
Yeah, right. But anyway, starting off with a tangent.
Yes.
If this is your first time here, guys, this is a real estate investing show. And Dan and I, on these Wednesday shows, we talk about our business, talk about real estate in general. We talk about investing and whatever else is on our mind, obviously, as you can tell right there. So, but really quick, I guess we need to address something that apparently one of us said on a show last week.
I would not make an uneducated comment on this show, so don't look at me.
Yeah, we would never say anything without being 100% educated and researched. That is not how we roll.
We don't have a Jamie over here telling us and doing Google searches for us.
Yeah, right. Yeah, we don't have an actual producer like verifying everything. Here's one thing I will say. I appreciate everybody who reaches out and says like, hey, you said this, it's actually this way, or like vice versa. You say things, you ask for clarification. That's great. Just so you guys know, the second that we stop recording this show, both Dan and I immediately forget every single thing that we said on the show.
But we do appreciate the candor and people that actually listen and say, you know what? I'm going to reach out to them and say this. Because they were wrong, or great. I enjoyed what they said, or a lot of times it's people that like really like what we're saying. And we're like, man, I'm glad you like what we said. I just got to remember that.
Yeah, exactly. So always appreciate it. If I have no idea what you're talking about, that's why. This phenomena exists across everyone that does podcasts. I know if you've ever done a podcast, if you have your own podcast, if you have friends that do podcasts, they will all be able to relate to what I'm saying. But the second that you stop the record button, couldn't tell you what we talked about.
Disappears into the interwebs.
Yep. Forever. And then sometimes I'll even like listen to our shows. I'm like, that was funny. Or I'm like, oh, that was not funny at all. Why do I think I'm so funny
anymore? Yeah. We always brief each other too before a podcast. If someone doesn't sound funny or off color, we make sure not to say it most of the time.
You got to. Today and age, man, you got to be careful. But anyway, the thing that one of us allegedly said was talking about the investment principle of the 4% rule.
I'm going to guess you had something bad to say about it.
Probably. Yeah. I'm just kind of like a general hater on people that do these like 30-year projections to try and establish a false sense
Here's where
of
it could have come
financial
from.
security.
Here's where it could have come from, because I think you and I do not shit on, but like don't agree with the path that most people take on FIRE, like what is that? Financial independence, retire early. Not that we both haven't like thought that's a great idea before, but I think a lot of folks with that are like trying to get the bare minimum to cover their expenses and use, cash flow from rental properties that doesn't necessarily exist in the way that they say it does, and also use the 4% rule from their, $250,000 401k balance when they're 38 years old, and use those funds to live off of. So I could see us saying something like that.
Yeah. But so very basically though, what you said, what the 4% rule is, it's this principle that whatever money you can invest, right, if you want to be financially independent, if you can get to a point where 4% of your invested money, you can draw that and live off of that amount, then you'll be good for the rest of your life.
You'll never have to touch the basis of your investment.
Correct. And so what a lot of people say is like, if you can get to $1 million invested and you can live off of $40,000 a year, which is 4%, then you're good. And like the thing should grow, and then the distributions that you should take should be balanced out, right, by the by the growth of the portfolio. And apparently it's supposed to account for inflation. That was our main point that we made, was that it didn't. Someone very kindly sent me a list of the things where it shows that it does account for inflation. I still don't fully believe that, because I don't think it provides an accurate view of inflation. And I also don't think that any of us actually know what inflation actually is. So how can it truly account for it when inflation has now just become a form of political candor to build or issues on either side of the...
I agree. So the 4% rule, hypothetically, the Federal Reserve, like their target for inflation is 2%, but people always say historically it's been 2 to 3% a year. So then if you assume a 7% growth rate, which is a decently conservative but average growth rate, you remember this is average over a retirement of 30 to 40 years, or however long you retire. Maybe you retire at 35, whatever. But on average, 7% growth a year. If you pull 4% out and you assume 3% inflation every year, that 7% growth means that $1 million will always keep up with inflation. And whatever $1 million is today in future value dollars after inflation, it'll still be $1 million, and you'll live off of the exact same 4%. The problem with the 4% rule, and why I don't think it's valuable, is as we're seeing today, inflation is 9%, or was historically. Now they're saying it's dropping down. And you allegedly, and you realize one of the ways they come up with inflation is they send people into grocery stores to buy a basket of goods, and those baskets of goods, they have never updated of what that is, and so they're probably still like checking to see what lard costs. I don't know, like things that they used to cook with in the 50s, right?
You're probably true. It's like, what is canola
right,
oil?
Exactly. And so they're going out there and they come together and they say, well, that basket of goods in the grocery store costs blah, blah, blah. Well, what we found out recently, one of the biggest drivers to our inflation, the stickiness of inflation, is housing right now. That is the biggest chunk of it right now. And so like that is way more expensive. The cost of housing is way more expensive than your freaking basket of goods at the store. So that could obviously skew that as well for you. But also, the government is reporting kind of in a not perfect way. And then of course you said there's some political sway of like, well, is inflation high, is inflation low? We found that they're not super good at controlling it. So if you assume 2 to 3% inflation every year, that's obviously we're living through it where it's not the case. And also the 4% rule does not help you very well if the market goes down and is depressed for a longer period of time. What do you do in those 2 years where you lost 20%, 30% of your 401k balance that you're pulling 4% off of? Now your 4% might be like a 2008 happens. Your 4% might have been 40 grand, and then the next year it was 20 grand. And then as you're eating away at that principal, because your expenses don't change, like especially as you get older, your expenses grow with medical costs. Like if you can't budge off of $40,000, now you're doing an 8% rule just to keep and maintain that same quality of life. So once you retire or leave the workforce, do you want to change your quality of life because the market's shifted? That's why I don't like it.
Yeah. It leaves a lot to question. You leave a lot in the hands, and it's funny. This dude's ears must have been burning. He literally just sent me a message on Instagram.
I love it. Nice.
Hopefully same guy
he appreciates us addressing this.
Yeah. So Kevin, if you listen to this one again, shoot me another follow-up message. I would love your take on Dan's rebuttal there.
Well, and also like the 4% rules, I mean, I guess it's a fundamental. So maybe you have $5 million and you really only need to live off of $1 million. And so when you're taking out 40,000, but you could actually hypothetically take off, 200 grand, like, yeah, it doesn't matter what you're doing at that point. You're living so far below your means.
Yeah, but like people don't do it that way. People use it on like the lower end of
Financial advisors use it to help you plan your finances for when you retire.
Well, I think a lot of it comes around to this, like the sort of traditional views of like your only form of income is going to be your job, right? Or like, you invest in stocks and things like that. And so it grows that way, right? But it doesn't take into account, using things like leverage or like having additional forms of income, whether that's like a side business or like you flip a house or you have capital gains from other things that you do. And so it's for like the quote unquote everyday person, right? That they do, like this average person. But I also think that notion of what an average person is and what they're capable of is 100% different now than it was even like 10 years ago.
Yeah, you're right. Absolutely.
Like you can see that just in the incredible growth of interest that there's been in real estate investing, period. Yep. Right? Something that was like loosely on the map 10 years ago. People were like, oh yeah, I read Rich Dad Poor Dad in like the 90s.
You're just some old guy now it's like, yeah, man, I love, buying my properties.
Yeah. Yeah, but now you got tons of like young people that are getting into house hacking. They're getting into flipping houses. We have people that are extremely high income earners that are investing in stocks, or like, I also want to own real estate because I understand the power of leverage and I understand the power of, the debt pay down, the tax benefits and all that sort of stuff. The knowledge that used to be reserved for like the elite is now such common knowledge that things like the 4% rule. Yeah. Things like the 4% rule I think are outdated, because here's the other thing too is, as more and more people become more financially strong, they become wealthier, the cost of general things in life to maintain a middle and upper class lifestyle will go up accordingly. When more people have more money, things become more expensive, regardless of what the actual federal inflation is. That's called supply and demand, which is a completely different economic factor that is never accounted for.
Well, I think inflation is measured based on supply and demand, right? So like if the demand theoretically, if the demand goes up and supply goes down, demand goes up, right? Then that creates some sort of inflation. Yeah, but
but the difference is, inflation is going to be sort of theoretically should be tracked equally across everything across the board. If the value of the dollar,
demand might drive inflation in other places, though, I think is what maybe you're trying to say here.
It affects it differently, right? And so if you have a certain quality of life, like a middle upper class lifestyle, and all of a sudden more and more people are able to afford that, those things will become more expensive. Right. It's why stuff like kids' sports are so absurdly expensive now.
Yeah.
Right? It's because there's a huge demand to have your kid play on like a good team so they can get into better college and just all sort of stuff. Like, they can charge what they charge because people pay it.
Right.
That is not one-to-one directly related to inflation. That is not affected by
is it upper middle class inflation? So have you seen these trucks driving around here like called the poop scoop or something like that, where they'll pick up your dog poop?
Yes. Yeah.
It's
a franchise. You can start one for like 20 grand.
No, thanks. I called one. Or Facebook messaged them. They had like an advertisement, and I was like, blah blah blah. My wife took care of it, and she was like, yeah. So they want $120 for the first initial like show up. I was like, man, like, no, I'm good. I'll pick up my own dog poop. But like, I was just like that. I used them last year, but then for this year, I just couldn't do it. And yeah, it was $120. That's an expensive time to go pick up your dog poops, in my opinion.
Wait, so that's each time, or just
that was the first initial whatever, and then I can't remember what it was after that. Maybe it was like $60 or $80. I don't know what that.
The consult where they come out, they like
how much
weigh
poop
it.
You have, like, anyhow. But I was like, that's a task. I don't mow my own lawn anymore. Like, that's a task that I would have totally paid for somebody. But I guess I'll just have to wait for my daughter to get old enough to pick it up for her, and until then, I'll bide my time. But that's a good example of services that did not exist 30 yeyears ago. No way were people doing that, or paying other people to walk their dogs, or other things out there. I don't know what services people pay for now that exist that people didn't do 40 years ago on principle.
And so I guess that's another thing you're saying too is, now quality of life, depending on where you're at, there's just more stuff that comes up depending on what sort of services, things that you want.
Right.
Although I think that somebody who's trying to live off of $40,000 a year off the 4% rule with their $1 million portfolio. They're not going to be paying for luxuries such as that.
The dog pooping, dog scooping, pooping. Yes. Yeah. Well, I definitely think you got to prioritize your luxuries at that point, but you should, indulge a little bit. But off of $40,000 a year, it's tough. But that's, I think, a good discussion about like why real estate investing does give people such more of an opportunity to retire early or to retire with control. And I think the big transition, especially after like 2020, people want more control. They realize like, oh, I can work my entire life until I'm 65 or whatever most people have the number in their head. And then I don't really have control at that point. I'm relying on whoever's investing my money, however you're investing your money. Like a lot of people, it's just in their 401k. They don't really have true control over that. A, the government tells you what to do with that money because from a tax perspective, and B, you're relying usually on other fund managers to manage the success of your retirement. But with real estate, you can manage that success and you can continue to choose to grow, and you can continue to work too after you quote retire by growing your portfolio and doing whatever you want to, all the way down from maybe you want to be the maintenance guy to maybe you want to learn how to, develop properties. And that's part of your retirement work. I don't know.
Yeah. And people will argue that you can't control the real estate market, which is true. But there are parts of real estate that you can control compared to stocks, right? So you can control your purchase price, right? With stocks, you can't buy at a discount. With real estate, you can. And that is literally the most powerful wealth generation tool for the average person, is the ability to buy discounted real estate. We've talked about this a lot of times before. If you have a $400,000 property that you buy for $300,000, you just gain $100,000 in your net worth the second that you close on it. Right? You can't go and buy a $100 stock for $75.
And you can't add sweat equity to the stock.
Exactly. You can't increase the value of the stock. You can do that with real estate. That's another thing that you can be fully in control of. So you can increase the value of it by increasing square footage, turning it into like a rent by the room situation, redoing the kitchen to make it so it rents higher. On that same note, you can increase the rent, which increases the profitability of the deal. As you can adjust things with the market, right? You can adjust your interest rates by getting different kinds of loans, like, refinancing, things like that. There are so many ways that you can take that asset and control the actual return and the value that you get from it versus just throwing everything into a bunch of securities, and it's less passive than, say, just having stocks, but also too, that's the trade-off. The upside is significantly higher if you're strategic about it. But and you can do that as many times as you want. If you do that across 50 properties, say you have that $400,000 property, they buy $300,000, you do that 10 times, congratulations, you're a millionaire. It's that's one of the kind of the falses about the false notions, I guess, you hear about like accredited investors or $1 million net worths or things like that. If you are like even the most basic real estate investor, is that what
you're going to bring up?
Yeah, the Smoky Mountain Bros. Exactly. If you owned a small handful of properties in some of the markets through 2021 and 2022, you are absolutely a millionaire, and you didn't even, you just made a good investment decision and got a little bit lucky. And timing, unfortunately, it doesn't mean that much anymore because there's a bunch of people that do the same thing.
Yes.
But so anyways, but on that note, if you were wanting to be that person, it is a great time to start trying to buy properties, because tell you what, this current phase that we're in, as of March 2023, I would say it is starting to break our historical notions on, I guess I would say seller interest in selling off market. Just as the market's gotten kind of weird, the interest rates are sticking around. People that have more and more of these distressed properties are finally coming around to the fact that they cannot just list them on the MLS and sell them anymore. And man, our sales guys and our clients for the Instant Investor partnership program that we have are having a field day of opportunity right now. Like we typically tell people when they start working with us in our partnership program, to expect 75 to 100 days before they start to have real traction. We have several people that we started with in March, and I think so far we have at least 2 signed around in the first month, if not 3, and we have 7 other contracts out across 2 markets, 2 brand new markets. That's 10 contracts out across 2 markets. That has never happened that quick.
That's pretty cool. I mean, it's just
insane.
It speaks to the fact that, like you said, there's the market's shifting, the on market is shifting, which is affecting the off market in a positive way. So the off market real estate is growing while the on market real estate is shrinking.
Yeah, and I think that that's an interesting thing too about real estate investment, especially off market investment, is I want to say we're like bulls to like the retail market, but we kind of are. Like like a retail investor, retail buyer, right? They want the market to go up all the time because the properties that they are in, they want to go up. And I would say, here's what I would say, I guess. For your holdings, you're a bull on your real estate. You're right. You always want to go up. For your acquisitions, we're realistically bears. Right. We want stuff to get shitty so that we can buy more discounted properties and that there are more people that are going to be willing to sell at a discount. And if you have a long-term mindset, right, you can be okay with your holdings going down a little bit because over the next 10, 20 years, whatever your outlook is on the property is going to go back up. But you have to look for those opportunities, those bear markets, to be able to acquire more discounted assets.
Yeah, and if you're like that person that's waiting, you're like, oh, I don't know, the market's, I think there's the bottom's still coming, or you're just waiting because, well, everybody's waiting right now as far as like, if you look at the headlines, people are unsure of the market. I find it more interesting that so many people that are really super successful that started in real estate and maybe even pivoted away from real estate but have done other great successful things, they always tell the story of like, oh, in the dot-com boom, or in 2007 is when I started flipping houses, the absolute worst time to flip houses. But if you have the wherewithal and you can kind of succeed through those rocky times, then you're going to skyrocket because you figured out how to operate a business and invest in real estate at the most difficult time. And so once the times get good, it's just easy. It's like, I don't know, stealing candy from a baby. Is that a thing?
Candy from a baby, fish in a barrel.
It's just a lot easier as you're on the up climb if you're in the rocky roads, which I would say we're kind of coming out. I don't think there's too much more we can see unless there's some unexpected things that I don't know about, but that happens in any market. But I think if you're operating this like bumpy road right now, I think you're reaping the rewards, and you're going to continue to reap the rewards because you learn how to operate and build the systems for this type of market.
Yeah, exactly. And I think that's the key there, is building the systems right now. And like, I would not say that this is the time where you should go and pour a bunch of your money like into rental properties per se. Just because like the interest rate situation is completely screwed up right now. Like with all this SVB stuff that happened over the past couple of weeks, the federal rates went down, the private rates went up, lenders are all over the place. They're all trying to lock you in with these prepayment penalties that are just disgusting. Don't buy shitty debt just because you want to buy rental properties, honestly. But it's a great time to be looking at like the transactional nature of real estate, right? Looking at building a pipeline, looking at getting into flipping or wholesaling. Or like, I say, don't use shitty debt to get into rental property. If you get stuff at a screaming discount, absolutely.
I mean, if you get a 6.5% 30-year fixed debt, go with it. And if it cash flows really well, why not?
Yeah, exactly. Like one of our guys in our instant invest program, Dylan, what did he say? He just pulled out, did a full cash out refi on a fourplex
plus 5 or 10
at 7 points. Yeah, plus 5 or 10K, and he got 7.75% interest. But because it was such a good deal, his DSCR is still like 1.4. Yeah. So that's his debt service coverage ratio. So that means that it is his payments coming in from the property is still 1.4 times the debt on the thing. So he's cash flowing machine. Right. So it doesn't really matter what the rates are now.
If rates go down, he's going to be even more of a cash flow machine if he wants to refi again.
Yeah. Exactly. Yeah, he'll be able to refinance down to like 5. That's going to be a freaking 1.6.
What was the saying realtors were saying there for like the end of last year? What did they say? Like date the rate, marry the home, or something like that.
Marry the home.
Yeah, don't date the rate on this. That. Like, don't expect it to come down next year. But like, if you can make it work as a rental property and cash flow like a king at 7.75, there's a good chance that you'll have an opportunity to refinance in the next couple of years and really cash flow well.
Yeah, well, I also don't like that methodology, though, for investors, because investor grade loans are different than retail loans. Like, they're more expensive to get. Even if you're getting Fannie Freddie loans, they're going to wreck you on costs compared to a traditional homeowner loan. Okay. They're going to go through all of your books. It's going to show up on your credit, all those sort of things. And then like if you're going to get a DSCR loan, like a lot of us do, the costs associated with that are massive. And then what's really getting people is all these lenders are getting so greedy with their early payoff penalties. Yep. And like they're wanting you to lock in a 9% debt DSCR, rental property loan with a 5-point step down prepayment penalty over the next 5 years, which means you're going to have 9% right now. And if you want to refinance or pay it off, it's going to be 5% to pay it off the first year, then 4% the second year, then 3%, then 2%, then 1%. Yep. And so that means that, you lock in this 9% rate, you're now stuck with it unless things adjust to a point where you're okay paying them a disgusting amount of money to adjust the rate again in the future.
Yes. Yeah, and I think there's some of it they know that they're able to take advantage of folks that have, flippers or investors that have bought in properties in the last 4 to 6 months because they have no other exit right now. And they're, no other good exit if it's a tight deal for them anyways. And so they know, some of these DSCR lenders probably know that they can get whatever they want right now because those people got to get out of those hard money loans, right? As those hard money loans dry up and maybe the banking picture kind of settles out a little bit, those rates will have to drop down, I think, to something more reasonable. Because you can't as a lender, you can't make money doing these kind of deals very long.
Yeah, you can't. I mean, and I think that's like their way of kind of hedging the fact that the volume is lower as they're trying to make up for it with the cost they make per loan, right? Which makes sense. Sure. It's business. And, it's so bad to the point, though, I did an Instagram story on this just the other day. But in this 1031 that I was doing, I sold some property. I was looking at 1031 into a short-term rental down in Austin. And I ended up deciding that I'm not even going to do that because after meeting with my CPA and figuring out what my true tax burden was going to be, basically the cost to get into these properties with not even considering the prepayment penalties, but just considering the cost these lenders are charging right now, it was going to be like only a $10,000 difference in the loan cost versus my taxes. So not only was I basically going to save 10 grand net if you compare the taxes to the loan cost, and I was going to be stuck into a property where I was like 8.5%, right? With a 5-year prepayment penalty. I'm like, why would I do that? I would rather just have unencumbered access to my capital and pay the tax man.
Yeah, pay over a $10,000 difference. Like if you're that weird about paying the government taxes, then that's a whole nother conversation. But a $10,000 difference, I'd take that money all day long. I'd pay the taxes.
Totally. Yeah, I mean, I'm going to be having back 200 grand. I can go and I can do like a hard money transactional loan on that, right, and get back half of that.
Yeah, absolutely.
It'll take me 24 hours.
Right.
It's crazy. Mm-hmm. So I know it's just a really, really interesting time. But yeah, either way, like going back to the systems and things, starting to build that out and getting a pipeline for it is going to be really, really instrumental. And if you have that momentum going as the stuff starts to turn and you're looking at acquiring properties, like you want to build that now versus in the future, right? And that's what we're going over with a lot of our instant investor guys. And we're like scaling up our stuff here as well, trying to get into those positions. And like, the motivation's there with sellers. Like with these markets that we've kicked it off, like we have a new sales guy who's been getting after it.
Lots of contracts out there.
He is. He's the first, I would say, hard sales guy that we've had where sometimes I think, we've had an issue right now. So we have all these contracts that are pending. We're not getting them signed. Sometimes I think he pushes them so hard that they're like, okay, yeah, we'll take your offer. Leave me alone. And then they ghost them, which is fine. Like, I would rather have that versus the opposite where you have guys that are just like, oh, well, I'm like embarrassed to make the lowball offer and they just sort of skirt around it. But if you're, focusing on building those systems right now, it is the place to be focusing on in this current market cycle because there's already abundant opportunity. There's going to be even more coming up.
So what you're saying is to build the systems out so that when more and more opportunities come, you're ready to take them down without getting lost. Because without the systems, what we found, and they don't have to be crazy tons of systems. You just have to have some good systems. What we found is it's so much easier for you to lose opportunity and not capitalize on it. And it goes back to what other people. We coach people on is like, don't think you need to go find more leads. You need to be able to take down the leads you have before you go out and actually start buying more leads, because that's people's tendency. They're like, well, I'm not getting as many deals as I want. Let me scale my marketing. Well, no, if you don't have the systems, you're having good leads fall through your cracks, which means you're not maximizing the leads you have now. So don't go spend more money on new leads.
Yeah. And I think that that's such a valid point. I'm glad you brought that up because that is something that has come up more and more frequently with folks that just hit me up on Instagram and those sort of things is they're always wanting to know what our lead gen looks like, right? And like how we're getting more leads and all sort of stuff. And you're completely right. I think that people focus on the lead generation because it's a less scary task than the sales.
It is.
Right? You don't have to, you don't have to get rejected. You don't have to like call people a bunch of times trying to get them back on the phone. But the sales and follow-up is what gets everything done at the end of it. I mean, even right now, we had a new gal on our coaching call this morning, and she was saying, she's an acquisition manager with one of the people that just joined up with us. And she's like, yeah, so we're currently calling like 500 people a day, and I'm just talking to so many people and no one wants to sell. I'm like, that's why I hate cold calling, because you're spending a ton of time, but it is not productive. It's like, why? Like, what is the point of that at the end of it?
Yeah, there's no point in calling people that don't want to sell to you, disrupting their day and having terrible conversations, or having conversations which is, I'll sell to you for, $300,000-$400,000 more than my property's worth, or more than you're willing to pay. It's not a productive conversation at all.
It isn't. And the thing is with cold calling too, especially these days, people like we use direct mail. That's our main form of marketing, right? And people always say, I don't like direct mail. It's so expensive. Exactly. It has a slightly higher barrier to entry than going and finding a VA for $500 a month on Upwork from Pakistan who's going to sit and call people. Everyone can do that. Everyone's doing it. The lead quality shit. You're interrupting people's day, right? It is not a productive way of running a sales team. And just like the nature of it too, because it's so invasive, people are not going to be reciprocating towards you with like a positive attitude. Right. Versus like with direct mail, they get the letter, they have time to go research your company, they have time to research you. They can choose to call you on their own time and have a conversation when they are ready to do so.
Absolutely.
And yes, it's less leads, but it is a more friendly conversation.
Yeah, it's like, I mean, we're in this day of age where like if somebody knocks on your door and you don't expect them, you're kind of like set off. Same thing with people call you without texting you first. Like there's all these things like just nuances that you don't realize to where you're like using old school methods like door knocking and cold calling, like upset. Like they're like, people are surprised. It's not that you're not going to get deals doing either of those methods, but the vast majority of people are like, who the hell's calling me? What the hell's this? And they answer, they're like, hello? You know what I mean? Like, or they just don't even answer their door because they're like, I don't know who that person is on my ring.
Yeah, right. Is that a UPS
who
guy?
is that? Where's the package at, bud? Yeah.
But I mean, yeah, you're not wrong. It's
changing. The times with technology are changing. And I mean, we harp on this. Direct mail is just a softer conversation, but it's also more motivated leads. And so then the time you're spending on the phone is so much more productive. And then as you build up this backlog of leads, because you're not going to close every single lead that comes in, but say you get 100 leads coming in a month, which is a lot, but like if you're working those leads and the next month you're consistently marketing, you get another 100, another 100. Next thing you know, you have a lot of leads that you're on the phone with, that you're nurturing, and you're not just prospecting and cold calling, which nobody like loves that, right? You're actually nurturing a lead system, and you're running a sales system that works.
Yeah, and that is where a lot of people get to. And they think that the business doesn't work, or they think they need to add on this new marketing. They have all these leads in the system, and they're like, I'm not closing things, so I need to find like this form of marketing does not work. Our experience that we had, which is also where so many other people that we've coached, that we know personally, that are in this similar style of business, they get into that zone. They're one-man operator, two-man show, right? They get all these leads. They're not closing deals. They need to look in the mirror and say, like, why is this not happening? It's probably because you suck at the sales.
Here's a good example too. Like Mike and I, we have a mutual friend, a good friend that we're running marketing for in a market for him, and we know he's like a great sales guy. And the first month, the first batch of marketing, same marketing we send for ourselves, same marketing we send for all of our other clients, same marketing we coach people to send. First month, how many contracts does he already have out there?
He's now at six. He spent $6,000 on marketing. And he's at 6 deals in a very competitive market.
Right. And I don't even know what they're averaging. I'm guessing because I know the market's $15,000 to $20,000 a pop on the fees, if not more, or somewhere around there. So you can do the math on the ROI. And he's a great sales guy. So he got the exact same marketing, the exact same data we coach everybody on, but he's having a vastly different experience than people that might be complaining that they're not getting enough deals through whatever method they're using to get leads.
Yeah, exactly. And everyone say easier market, things like that.
No,
it's not, man.
It's not.
Like, it is an extremely hot market, right? He is super skilled, right? And like even to retract further on that, like, so our experience when the first traction that we had, and we went to a mastermind, I did, and they looked at, our coach that was there, looked at the CRM, and he's like, there's all these deals, like, I think you just suck at sales. And that was hard for me to swallow, right? I had to accept it. But we came back and, I told Dan about that, and we decided that we we're going to hire our first salesperson. Had no idea what that looked like, how to interview people.
Didn't have the money to pay them.
Yeah, didn't have the money to pay them. We had like $4,000 in the business bank account. We brought in this first acquisition manager, and she closed 7 deals in the first 2 weeks for leads that were already in our system
that we had already talked to.
Yeah, like lots of them too. And like some of them, they would even talk shit about us because they didn't like us, but they liked her so much better. And so they were okay working with us proxied through her, right? And I guarantee you that if you're in that, if that sounds like you have a couple hundred leads in your CRM and you're not moving things forward, that you very well might be that same person. I guarantee you need to look at that.
So like you could do that. So yeah, if you have like leads in your system, you're having a tough time closing deals, like, so you have like $2,000 that if you could just bring somebody in on a commission schedule, maybe you tell them you're going to give them a base pay of $2,000 and then a commission for, X amount of months, and then the base pay can go away. But for 1 month, just think about that. Invest $2,000 in that person. And I'm not going to guarantee you any results, but if they're a decent salesperson and you have actual good leads in your system that you brought in, you're probably going to close a deal.
Yeah, and exactly. You have actual leads that have rose in their hand. They're not cold calling leads.
They're not just junk, shitty leads.
$500,000.
Yeah, but say you did send out a batch of mail to a good list of people, like a good list, something that we would coach and teach on, then I can guarantee you, if you're not closing deals, if you brought in a person that has some reasonable level of sales skills or sales background, and literally just think about it as investing $2,000 into more mail, but instead of more mail, you're investing $2,000 into a person. Man, you have a vastly higher opportunity of making money doing that than buying more mail.
Absolutely. And the thing is too, it does need to be a professional real estate person. That's you, right? You already know how to analyze the deals. It needs to be a people person. So like our first acquisition manager that we had, her experience was selling kettle corn at a farmer's market. And she worked as a bartender, right? Previously, right? And we kind of just, our decision came down to like we actually had another guy we interviewed that was so much more qualified for the role, but he walked in, he was really sweaty, and we were like, can you imagine this guy like sitting with the sellers that we currently have right now? Like this would not go well.
So we didn't hire him.
Versus we had this guy that came in, and we're like, okay, she's very personable, she knows how to talk to people, everything about her aura, I guess, like her general energy is really good. Like let's just give her a shot. She had an interest in real estate. We're like, we'll teach her the real estate part. And sure enough, she came in and slayed. And I literally remember her calling me, and she was like, yeah, so I know we said you need about like 150. They said they'd be good at 130. Is that okay? And I was like, absolutely.
Do it.
Just
make it happen.
But yeah. So point being, if you're in the business right now where you are trying to figure out why you're not succeeding, it's very well possible that it's not your marketing, but your sales. And you don't need to reinvent the wheel either with the sales side of it. You don't need to find someone that's an absolute killer. If you find someone that is willing to put in the time and is personable and willing to and interested in building a relationship with your sellers and with your leads, that's where deals come from, especially in the off-market world. It's rarely about the real estate.
Agreed.
So cool. Good stuff. Anyways, anything you want to finish off with, Dan? Any Dan's pop culture?
Any Danisms? I don't have any Danisms for this week, actually. I don't think so. Not that are appropriate for the podcast anyways. I don't think.
All I know is that I'm ready for the SVB stuff is like the big thing still going on.
Yeah, people are really upset about that. I don't know what to think, honestly, about that. Like, I don't think it's a systemic issue, but then they're like, oh, these regional banks. I'm like, I don't know. Like, our regional banks are like pretty solid. Like, I don't know. Maybe there's some that are not good, but it's because it's skewing towards politics, right? Like, oh, this bank is got a bunch of liberals that paid themselves bonuses before they, it's like, okay, that's not a logical reasoning, you know, but like,
see, and that, I think that's why I've instantly lost interest in it too, is it becomes
right. And then here's the thing that's worse about it is the information. And I'm having conversations with people like the information they're getting, like that's vastly different than the information that's actually publicly available. Where did you get that from?
I know.
Like that's not accurate. And so it makes me think about other things that I'm not informed about, of like how crappy the information that might be getting fed to me is. And so it's just like, man, it's kind of scary.
I mean, I always just live on the sort of position that the stuff that's being relayed out there is always only the partial truth, and it's the truth that they want you to know. Yes. It's not the actual full situation. And as much as you think you can figure out the actual true situation, you cannot.
If they don't want you to know it, they won't let you know. Right.
You're not gonna. Yeah, everything that they spoon feed you. That if you ever read news and it causes you to have like a little bit of an emotional response to it, like especially in a negative way, don't do it. It's a trap. That's what they want.
So true, though. I like it.
But anyway, that's my view on politics in general. But all right, guys. Anything else to wrap up, Dan?
Nope. I'm good, man.
Nope. Cool. Well, you guys should all go and buy a Collecting Keys or a BDE Big Dan Energy shirt at store.collectingkeyspodcast.com. We have our little.
Are we going to be able to get this tattoo done or what?
I know you can.
We can't bring that up yet.
Yeah,
is that not publicly available?
No, it is. I haven't messaged the guy back yet.
We have a potential candidate.
So I made a remark again. I forget that
flippantly threw out some stupid thing.
Yeah. I said something that if somebody gets a Collecting Keys podcast tattoo, that I will personally pay them $1,000.
I'm glad you said personally you'd pay them. So this is all on you, man. This has nothing to do with me.
That's dude. I will totally eat that just for my own satisfaction. But I had someone reach out to me on Instagram who said like, "Hey, I heard about your show, blah blah blah. I heard you mention that you'll give $1,000 to someone who gets a Collecting Keys tattoo. Are you still offering that?" And here's what I'm saying. I'll respond to you on Instagram as well, Charles. Yes. If you get a full tattoo of the Collecting Keys podcast logo.
What is that? Just the K symbol, or does it have to say?
No, sorry. The entire Collecting Keys podcast. Like you go to collectingkeyspodcast.com. I want the entire thing that's in the top left hand. If you get that done, has to be a professional tattoo, not a stick-on tattoo. Okay, and you send me a photo of it, I will send you $1,000. And that will be the best. You
gotta have a photo of the needle in the arm. Is that what you need to see?
Yeah. So if you do that, so I need proof that it's a real tattoo and not like a stick-on tattoo, and I'll send you $1,000. I'm not paying for your tattoo though. You got to go find the Flash tattoo guy. You got to pay for that yourself. So your net will be like I
don't even know what tattoo costs.
Something like that. Not expensive. Probably $50, $100. But yes. So I'll shoot you a message on Instagram. But that's a one-time only.
Lock it up.
So no one else can get a tattoo, unless you're like really high profile. Like if you're like on OnlyFans, you want to get a Collecting Keys tattoo. And
totally, we can support that. That's an interesting advertising model. I wonder if people are exploiting that.
I don't know. Maybe. I feel like it's pretty fringe. I don't necessarily know if
it can't be that fringe because like the tax returns on some of these people are vastly different than mine.
That's
people
true.
Making $400,000 or $500,000 a month. There's a lot. It's not fringe anymore. There's a lot of people watching.
We should start like a fund where we just target like those people to buy like heavy tax appreciation plays, so we can like help them reduce their taxes. Man, you know, like some people do like the ATM funds or some of these sort of things where it's like, you know, you go and find doctors, you get them to buy a bunch of ATMs because those depreciate so quick. What if we did that, but we targeted OnlyFans people?
Do it. I think it's a great tactic.
Yeah, if you're raising money, that's untapped funds right there.
Yeah. Well, it's like being associated with like like an NFL player or NBA player, a professional athlete, where they get these large sums of money very quickly. That they have people that approach them and say, "Hey, I know you just made $8 million on your signing bonus. You should invest that." Yeah. Same thing.
I mean, fans, I guess you're not wrong, but they're infinitely more accessible than an NFL player because they're putting themselves out there
onto the internet forever.
So, anyways, guys, definitely go check out the merch store. It is store.collectingkeyspodcast.com. You can pick up some shirts there. They're all the Bella canvas shirts. They're super soft. They're nice stuff. So you should check those out. And we keep them reasonably priced, like $25. They cost us like $22. We literally make no money on those shirts. It is purely just because we think it's sick that people actually want to wear things with our logo on it. Besides that, guys, if you could please share this show with anyone who might find it interesting, that's an easy way for us to grow. Also, follow us on Instagram. I'm at Mike_invest. Dan is at InvestorManDan. And shoot us a DM on there. We love to chat with people. We're always happy to hear about what other people have going on and to provide some investment advice as best we can. Besides that, I think that's all we got. So thanks for listening, everybody, and we'll talk to y'all next week.